Hey, Bulls and Bears. I am back. I am back. And another update here, another financial economic news report. And we've got a lot to talk about as usual. First, let's just kind of take a step back and talk about what's going on and where we're headed. We're headed into uncharted waters. People don't know exactly how to prepare, what to prepare for. Even the self-described financial experts are split on what's going to happen. We're going to talk about some home price predictions that are coming out here. But we've got one expert economist over here saying there's going to be massive inflation, runaway hyperinflation, because the Fed's going to pivot and pump a bunch of money back into the system here with QE Infinity going on overdrive. While on the other hand, we've got people on this side predicting a crash, deflation, falling prices because tightening credit. So here's the scary part. Either one of those can happen. It depends on what the deciders decide to do with this situation that's here right now. Here's on the deflation side. Here's one of the latest things that we've been talking about here. U.S. bank lending has slumped by the most on record. The most on record. The biggest drop in bank lending that we've ever seen throughout history has just happened at the end of March. Now, this is a report that came out of Bloomberg and some other publications were talking about it. So that came out on April 7th. And at that time, they know the numbers from the end of March. Now, here in a few days, we're going to find out what happened in the first week of April. And I suspect that it's going to be another big drop in bank lending. So this is going to take a little while to play out. If this continues, though, we are headed down the deflationary path, because remember, price bubbles and cost of living going up and price inflation is caused by people borrowing money. And now banks are actually pulling back on the lending, especially the regional and the small banks. Because why? Well, they were told that they may not get the get out of jail free cards that some of the mega banks are getting. We had Janet Yellen out there saying, well, the Treasury and the Fed, we have to decide which banks are systemically important to be able to come to the rescue for the depositors. So we've got these massive outflows of these from these smaller banks to the big mega banks, further causing panic and tightening lending at the regional and smaller banks. So no one knows exactly how this is going to play out. This is uncharted waters, unprecedented territory. It's the twilight zone. I mean, no one knows exactly where we're headed into. Tell me what you want to call it down below. But nonetheless, it's going to be interesting. It's going to be scary to some people. And, it is kind of scary not knowing exactly what to expect. Normally you would look at prices and just say, well, these assets are unaffordable. Homes are unaffordable for most people. Cars are unaffordable for most people. They're talking about 8-year car loans. They're talking about 40-year mortgages. And that used to be a thing we laughed at, but it's really being introduced now. I'm going to talk about that here in just a few minutes. But first, sound money is where we're headed ultimately. So I want to give you a word from our sponsor here. Listen real quick, then we'll be right back here to get into all this news. Noble Gold Investments have made it their mission to stay on top of the most important news. 3 bank runs in less than a week. These are the second largest and the third largest runs in history. The government is taking steps to guarantee all deposits. That means more money printing. Plus, the Fed is sitting on $1.2 trillion in losses on their $8.3 trillion bond portfolio. And the Fed will continue to raise interest rates even if they tank the economy. Do you know who are the only ones that are not afraid? The ones who are invested in gold with Noble Gold Investment. Gold is the most stable asset outside of any government control. Thousands have approached Noble Gold Investments to get their hands on gold. Hurry and go to bullboomgold.com to secure your wealth now and get a free 5-ounce America the Beautiful coin with each gold or silver IRA if you qualify. Go to bullboomgold.com, bullboomgold.com. You can also see the link in the description of this video and down in the comment. All right, first let's talk about what this economist over at Zillow, the home company, home listing company, real estate company, it's unlikely home prices will continue to fall. Skylar Olson, that's Zillow's chief economist, and his reasoning is low inventory. Low inventory. And it is true. Inventory is very low. Thus, sales are low, not just because of low inventory, but because of higher interest rates, people not qualifying for mortgages like they used to because their incomes are not enough. And a lot of people losing their jobs, a lot of layoffs, especially in these tech-heavy cities like San Francisco and others here on the West Coast that have seen very significant price declines. I mean, I say significant, it's really just the beginning if this tighter lending situation continues. But the low inventory is going to change this year. I think a lot more people are going to be putting their homes on the market because you're going to see more layoffs. People are not going to be able to keep up. They're not going to be able to keep up with the cost of owning these homes. And especially, again, with the layoffs, it's going to be a snowball effect. And, there's going to be a lot more inventory coming on the market, in my opinion, this year. But Zillow disagrees. They say prices are not going to come down here. Quote, there are so few for sale homes that buyers still compete for them despite higher mortgage rates. Yes, there actually still is bidding wars out there right now, even with the higher mortgage rates. Buyers can expect higher prices, but more concessions from sellers who are eager to offload their homes. He not only does he say that prices are not going to fall, he says higher prices, folks. This is the guy over at Zillow, of course. He's not going to predict the crashing housing market because obviously Zillow's in the market of real estate, so they're not going to go out there and cause panic and shoot themselves in the foot, right? So obviously it's not going to be any surprise, what they're telling us here. But that's just some of the things out there being said that are, I think, causing a lot of confusion. People are still, in a rush to buy a home in some cases because they feel that there's still going to be inflation because they're told by some people that there's going to be inflation, including the real estate bulls. And then on the other hand, we have this credit crunch, and people are saying that there's going to be this major bank consolidation, that they're going to let all these banks, smaller and regional banks, fail to consolidate them to the mega banks. Is that the plan? I don't know, but I know that we need to prepare for both scenarios here because what's going on right now is it's wacky, it's scary. I mean, pick your word here, but let's get into some other news here. NPR report banks are spooked and getting stingy about loans. It just underpins, what we've been talking about here with the credit crunch. Will the powers that be come out tomorrow, next week, and will they say, yes, we're going to back all depositors no matter what the size of the bank is, and therefore banks are going to start lending again? It could change. It could change on a dime because, we are, as traders, as investors, we're sitting here listening to these people tell us what's going to happen with the banks, which banks are going to be rescued, which banks are going to be left to fail and not rescued. So, we have to sit there and listen to what they're telling us, and hopefully they'll be true to their word, but the words can change, very drastically and at the drop of a dime. The credit crunch the Fed fears may already be taking shape. Think about that. This is a headline out of Reuters. The credit crunch that the Fed fears. Well, if the Fed wanted to stop inflation, it seems like they would want a credit crunch. Think about it. So if there's a credit crunch, that's going to be deflationary. If the Fed wants to stop inflation, then they would want a credit crunch. So what's going on here? I don't think we're being told the full details here on what's happening. Is the Fed really trying to stop inflation? Because if they were, they would want a credit crunch. So do they want falling prices in real estate? Do they want falling automobile prices? If they do, then they need to restrict the lending. The less people that can borrow money, then prices come down because it tamps down demand when you stop the lending. So it's interesting here. This is out of Reuters. Or is this why they didn't guarantee the depositors would be covered at these smaller and regional banks? Maybe they want the credit crunch. Is this another way to stave off inflation in addition to the higher rates? Very interesting, but time will tell. We'll have to see how this all plays out here. All right, well, let's talk about some unfortunate news. As we know that as the economy continues to crumble, as more people get into poverty, we see more people just doing crazy and dangerous things. We had basically an attack, at a bank, and this was a former employee of this bank that went in and attacked a bunch of people. A few people lost their lives. And was he laid off? He was fired, it says. Fired, laid off, I'm not sure which one. Some say those are interchangeable terms because you're out of a job either way. So we're going to see more things like this come up, and more violent situations. There's a news article that someone posted down in the comments of this channel, and I wasn't surprised when I saw it, but let's talk about it. A Chipotle somewhere over in, I believe it was Columbus. It started over not getting enough cheese on their meal. Chipotle, the restaurant. Customers, it started with not getting enough cheese on their meals. It ended up with threats, and they tried to take out some of the employees at Chipotle. I feel really sorry for people that have to deal with the public face to face, especially at fast food places where you have, just crazy people coming in right in front of you, transacting with you at an arm's length. And, they have the capability of really, hurting you. And it's sad that this is, the society is just crumbling like this, that even a day at work, you may have to say your prayers that you're even going to make it home from work, depending on, how closely you interact with the public and all of these, what just seems like increasingly amounts of unhinged people out there, just insane people. Now, just a few minutes ago, we talked about deflationary forces, tightening credit, which is deflationary. But on the other hand, look at this, inflationary forces. California to front 20% down payments with 0% interest to home buyers with incomes $211,000 or less. So trying to get people into a home at this point where prices are actually already coming down, especially in California, but now we've got 0% interest and a 20% down payment gift from the state of California here. California homebuyers making up to $211,000 annually will be able to receive a 20% down payment and all closing costs covered at a 0% interest rate. Wow. So while the state has long offered homebuyer assistance through the state's Housing Finance Agency, Cal HFA, the new program, the California Dream for All Shared by Appreciation Loan Program, will give the state proportionate interest in the property they're helping with. The payments are deferred for the entire life of the loan, adding, quote, when you sell the property or refinance the loan, they take up to 20% of the appreciation. The homeowner gets to keep 80%. So it's basically a joint venture between home buyers and the state is what it sounds like. And that's, what is the timing of this here? We've already read articles here about a 40-year mortgage being implemented. They're trying to get people into these bubble-priced homes at a time when we could be seeing even bigger deflationary actions in the housing market. We've already seen home prices come down about 10% here in San Diego County, and other cities. San Francisco is even worse. But you want to help people get into a home at this point. What is the reasoning behind this? This is very interesting, folks. Billionaire investor Barry Shirtlight says inflation is going to drop hard. So another quote-unquote expert, now he's saying deflation. This is out of Fortune, and I probably didn't get his name right. Sternlicht. Anyways, here, Starwood Capital CEO says inflation is going to drop hard and very soon. In an interview on CNBC, he was asked what he'd say in response to JP Morgan CEO Jamie Dimon's annual letter to shareholders, in which Dimon writes the current economic conditions create more risk and potentially higher inflation and higher rate hike. So basically, Jamie Dimon's out there saying there's going to be more inflation and therefore more rate hikes. People like this Starwood Capital CEO is saying there's going to be a credit crunch and deflation. See, nobody knows. The predictions are completely 180 opposite from one another. And that's what happens when you have unpredictable entities out there, manipulating this whole thing, right? So this market's wild, folks. And things are going to get even more wild as we go into the summer here. We've got the rollout of this digital currency. It's interesting that we see the bank crisis here happening at the same time that this digital currency is being rolled out. So we're going to stay on top of it here for you. Keep stacking preparations here, because things could get nasty and wild sooner than we might expect here. And I wouldn't be surprised if we woke up one day here in the coming weeks and we see that banks, maybe hundreds of banks, have failed. We don't know, but we need to prepare for it. So we're going to be ahead of the curve here. Thanks everybody for watching. We're going to wrap this up. Bye for now. Keep stacking. Peace.